Which fund would have made you more money if you put $10,000 into it? VOO or QQQ? I've collected all of the data over the last 15 years for both and simulated this, and the results are very interesting. Both of these ETFs, or exchange traded funds, are incredibly popular online. VOO is known for its long-term returns, while QQQ has built a reputation for high growth potential. In this video, we'll dive into key metrics like their past and current performance, price appreciation, dividend payouts, and a side-by-side comparison to see how each would have performed if you put $10,000 into it 15 years ago. Let's take a look at our first competitor, QQQ. This fund is owned by Invesco, and their objective of this ETF is to track the NASDAQ 100 index, which provides access to the performance of 100 non-financial companies. And they also have a relatively low management expense ratio of around 0.2%. Now, the holdings and sector breakdown are a very important part of this fund. Their top sectors are technology at 59%, consumer discretionary at 20%, and then healthcare around 5%. Diving into the individual companies, we can find Apple at 8%, Microsoft at 8%, Nvidia at 7%, and Amazon at 5%. As you can see, most of the companies in their top 10 holdings are within the technology sector. Although investors consider QQQ a growth-based fund, it does pay a dividend of approximately 0.6%, and they have been paying dividends for about 17 consecutive years, with 3 years of consecutive dividend growth. Even their 3, 5, and 10-year dividend growth rates are between 10 and 19%, something that isn't too common for growth-based funds. Now let's take a look at our competitor. VOO or VOO is Vanguard's S&P 500 ETF designed to track the performance of the S&P 500 index, which represents the 500 largest US companies. They offer a modest dividend yield around 1.2%, but the primary focus of this ETF is on the price appreciation. They also have a pretty competitive management expense ratio of 0.03%. Now, why is VOO so popular among investors? The appeal comes from the historical price appreciation. The S&P 500 index, which VOO tracks, has historically returned between 8 to 10% per year. Now, what companies are driving VOO's growth? Some of the top holdings include Apple, Nvidia, and Microsoft, each making up around 5 to 7% of the ETF, while Amazon and Meta, or Facebook, follow at 3 to 4%. Now, the sectors making up this ETF are technology around 30%, financials around 15%, consumer discretionary and healthcare both around 10%. There is some overlap with QQQ, but we'll see how that compares when we do our analysis. Although VOO's dividend yield is rather low, there is still some appeal here, and this comes from their dividend growth rate. Over the last 5 to 10 years, VOO has managed a 5% dividend growth rate, which is impressive for a fund focused on price appreciation. Let's start things off here with Invesco's QQQ. Back in 2010, they were trading around $49 per share, which means that a $10,000 investment could have returned around 202 shares at this time. If we move forward to the end of 2011, we can see that QQQ would have already seen some growth, with the shares increasing to $55 and some dividends along the way. This would bring the total return after just 1.5 years up to $1,500 or 15%. Moving along to year 5, and this is where QQQ really starts to take off. They are now trading around $111 per share, which is a huge increase from just 5 years ago at 49. Dividends would make up around $950 of these returns, but most importantly, the total return would now stand at $15,000 or 150%. So just 5 years into this investment, and it would have more than doubled. Moving into year 8, bringing us to 2018, QQQ is now trading over $150 per share. It looks like things were on a bit of a decline this year as they started Q1 to 3 a little higher in terms of share price, but this is still an increase from our previous time slot, bringing the total return up to $26,000 or 260%. Now, these are some very competitive past performance results, so let's see how VOO would have compared in this same time span. VOO was brought onto the market around $104 per share, and for a $10,000 investment, this would have returned around 95 shares. If we move forward to the end of year 1 in 2011, VOO would now be trading at $114 per share, bringing the total return up to $1,500 or 15% in that first year and a half. Moving forward to year 5, and this is where VOO starts to see some growth, now trading around $186 per share and collecting around $1,600 in dividends along the way. This brings the total return up to $11,400 or 114%, meaning that in just 5 years, VOO would have already doubled that initial $10,000 investment. Now, by year 8 in 2018, VOO is now trading around $229 per share, and that would mean that the total return is almost $19,000 or 189% just 8 years into this experiment. But we saw that QQQ's total return was over $26,000 in this same time period. Now let's move along to the side-by-side comparison as we move towards the end of our analysis. Let's continue with QQQ. In year 11 or 2021, they would now be trading at $397 per share, meaning that the total return sits around $82,000 or 8 times that initial $10,000 investment. Looking at VOO in the same time period, they would have also increased their share price to around $436 per share, meaning that the total return is $46,000. Still pretty good, but QQQ is definitely stealing the show in this one. Jumping to our final time frame, which is the end of Q1 2025, and QQQ is trading around $468 per share, making the total return almost $103,000 in 15 years. VOO, on the other hand, is now trading around $513 per share, which brings our total investment to $61,000. QQQ has returned more money between 2010 Q3 to 2025 Q1. I also had a few interesting graphs with some observations which we can dive into right now. Now, these graphs on the screen here are showing the performance of both QQQ, represented in the blue, and VOO or VOO in the red. It's pretty clear that QQQ has very strong growth potential, but they can also be very volatile. Have a look at this data point around 2022. We saw that QQQ took a nosedive here from a total return around $82,000 down to just $56,000 in the span of only 2 quarters. That is a $26,000 loss based on the numbers in this experiment. Now, VOO also had a loss in that same time span, but from $46,000 down to $36,000. So just a $10,000 loss. Although QQQ has much higher growth potential, there's also more risk associated with a growth-based fund. Now, I know that these are not dividend funds, but something we did set out to review at the beginning of this video was also those dividend payments. VOO would have paid out around $7,300, while QQQ would have paid out around $4,600. These were already included in that last graph for the total return, but it's just something to look at here as a bit more context. Nonetheless, these are 2 very popular ETFs in growth investors' portfolios, and this always begs the question, which one would you prefer in your portfolio? If you did enjoy this video, I have done plenty of comparison videos just like this one, and I'll put 2 up on the screen now if you are interested. Be sure to like and subscribe as it really helps me out, and leave a comment letting me know what you think of the video. Remember, past performance does not have any bearing on future results. Good luck, and thanks for watching.